The era of pouring billions into speculative tech concepts is over. In 2026, capital is demanding physical reality. We are witnessing the launch of a multi-trillion-dollar industrial buildout that is actively rewiring the global economy with steel, silicon, and hard assets. Rising geopolitical flashpoints and aggressive new tariff structures are forcing nations to secure their own supply chains. At the same time, C-suites have lost their patience for exploratory investments. They are demanding immediate, measurable outcomes on every dollar spent. This map visualizes the sheer volume of capital in motion. We are tracking a historic $1.01 trillion budget request from the Department of Defense, alongside an estimated $3 to $4 trillion in cumulative global AI infrastructure spending by the end of the decade. Navigating an environment where trillions of dollars are changing course requires a solid framework. That's why I've partnered with SFA. They offer a free stock investment class designed to help you decode these macroeconomic shifts and position your portfolio to capitalize on them. Tracking this flow of capital provides the ultimate predictive roadmap for the next decade. It identifies exactly which industries are being positioned to dominate the market and which sectors are being left behind. Let's look closely at that fiscal year 2026 Pentagon budget request. This document reveals a hard pivot away from legacy hardware. The focus is now on rebuilding our military by matching threats to capabilities and rapidly fielding emerging technologies. Those technologies are software-defined, autonomous systems, increasingly built by a new breed of agile defense contractors known as neoprimes. For the first time, the department has carved out a dedicated $13.4 billion budget line exclusively for artificial intelligence and mass autonomy. This covers everything from uncrewed aerial collaborative teams to autonomous maritime vessels, all designed to maximize lethality and operational readiness across every domain. The most expensive single initiative within this framework is the Golden Dome. This is a multi-layered, space-based missile defense shield aimed at countering hypersonic and ballistic threats. The Pentagon's current estimate puts the system at $185 billion, backed by an initial $25 billion down payment. This bar chart reveals a drastically different financial reality. Independent watchdogs and policy institutes warn that building, operating, and maintaining a robust space-based architecture over the next 20 years could actually cost taxpayers a staggering $3.6 trillion. The math creates a massive strategic vulnerability known as cost imposition. If the United States is forced to launch a multi-million-dollar space-based interceptor to defeat a drone swarm that costs a fraction of that to produce, the defense architecture risks bankrupting the country before a conflict even starts. Modern defense is an economic arms race. It will test the absolute limits of American capital efficiency. That push for autonomy is also accelerating in the private sector. While the Pentagon spends billions on combat systems, corporate capital is driving the evolution of software, from generative AI to agentic AI. Conversational chatbots require human prompts for every single step. Agentic systems operate independently. They can perceive an environment, formulate a multi-step plan, and autonomously execute actions across different software tools to achieve a specific goal, like processing a supply chain route or resolving a customer support issue end-to-end. This line graph illustrates a massive adoption curve. Data from market.us projects that agentic AI presence in enterprise software is jumping from less than 1% in 2024 to 33% of all applications by 2028. Companies are moving past the experimentation phase because the math works. US enterprises are reporting an average return on investment of 192%. To force this transition, the government is utilizing an effective applied tariff rate between 7 and 8.5%, paired with sweeping tax expensing rules for machinery and equipment. The goal is to aggressively incentivize the reshoring of manufacturing and secure critical supply chains within national borders. Rebuilding an industrial base from the ground up creates friction. Moving supply chains to higher-cost domestic centers contributes to slowing baseline GDP growth while keeping inflation stubbornly sticky. Policymakers have made a calculated trade-off. They are absorbing the pain of higher short-term consumer prices to buy long-term technological and industrial independence. What ties the defense budgets, the AI infrastructure, and the reshoring efforts together is a focus on the physical world. The invisible utilities of the past, power grids, space architecture, and AI networks, are the world's most valuable strategic assets. The execution phase will be brutal. The market faces immense supply chain bottlenecks, escalating geopolitical flashpoints, and the reality that nearly 40% of poorly governed AI pilot projects are projected to fail by 2027. Capital markets are reacting accordingly. The tolerance for visionary roadmaps has vanished. Valuations are now ruthlessly separating the winners from the losers based entirely on who can execute at scale and prove measurable revenue. If you want to understand how to align your own portfolio with these macro trends, check out the link in the description. The SFA free stock investment class is designed to help you navigate this specific transition. We have entered a multipolar world defined by physical capacity, secure supply chains, and autonomous execution. The planning phase is over. The future belongs to the builders.